Hi, everyone. My name is Jocelyn. I am the Youth Services Librarian at the Lyon Township Public Library. And you are at Virtual Michigan No Fault Insurance, Know What You Are Buying. So the recent changes to the Michigan No Fault Act added coverage options to auto policies that Michigan drivers previously did not have. If you are confused about what these new options are, this little virtual webinar will provide a general basic overview of the Michigan No Fault Act and help explain some of the different levels of available coverage. And you can ask a couple questions if you have any. We are very excited to have Sarah Kuchon of HOHAUSER Kuchon here with us tonight. Thank you so much, Sarah.
My pleasure. So I've given this talk or seminar a couple times, and I find that sometimes it's helpful to just let people ask questions as we go along. I will provide an opportunity at the end to answer any questions that anybody may have, but if you have a question as we're going along, please feel free to speak up and ask your question. If it's something that I'm going to cover later, I'll just let you know that. But there may be things that you're wondering about that I don't cover, and so I want to make sure that all your questions get answered. So I am going to share my screen because I do have a little PowerPoint. So let's see, slideshow from the beginning. All right, so this is Michigan No Fault Insurance, Know What You're Buying. I put together this seminar. I used to do it in person. Now it's a webinar. I put this together because what I found is that most consumers, when buying their auto policies, don't really know what they're buying. And so I think that it's very important to know what you're buying, what you're paying for, and what your options and available coverage are. So hopefully when you leave tonight, you'll have a general sense of what the Michigan No Fault Act provides and what coverage is available to you. And again, if you've got questions anywhere along the line, please feel free to speak up and ask your questions. So the Michigan No Fault Act became effective in October of 1973. And essentially what it did is created a mandatory insurance system. So prior to October 1st of 1973, Michigan was not a no-fault state and did not have a mandatory insurance system. And what that did is it created a system where we had people who were injured who didn't have any recourse. They were injured and they didn't have benefits available to them, and it's likely that the person that caused the accident was uninsured. Also, what we had was a lot of small claims that were clogging up our court systems. And so the Michigan legislature got together and they said, we want to solve this problem. We are the Motor City after all. We love our automobiles. Most people in Michigan own an automobile. And so we want to solve this problem. And so they created the Michigan No Fault system. And so most people, I find, sort of view their auto policy as just another annoying bill. I got to pay this bill every month. Why do I have to pay this bill? And really what they're looking for is just give me what I have to have, and I want to pay the least possible. And what I always think is interesting about this, so when I have this conversation with people and I start asking, well, what kind of coverage do you have? Okay, if you're paying this bill and you don't like paying this bill, what exactly are you paying for? Do you have coordinated coverage or uncoordinated coverage? Do you have uninsurance, underinsurance? And a lot of times I find that people don't know the answer to that. Well, I don't know what kind of coverage I have. You know, I'll ask, what's your deductible? I don't know. what kind of limits do you have for bodily injury? I don't know. And so a lot of times people are paying for something that they really have no idea what they're paying for. And so, or electric bill, this is something that has a very specific purpose. It's more than just having that proof of service in the event you get pulled over that you can show to the police officer so you don't get another ticket. It's supposed to provide coverage in the event that you suffer a loss, you or your family suffers a loss. So what does that mean? So if a motor vehicle happens, and that's typically the event that triggers your no-fault policy or your auto policy, is a motor vehicle accident. There are some other circumstances where it may be triggered, but typically we're going to have some type of a motor vehicle accident. So when we have an accident, the injured party, assuming that they're injured, has two potential claims. They have a first party claim, and this is a claim that is paid without regard to who caused the accident. It's without regard to fault, which is why we call it no fault. And then you have a third party claim, and I'm going to explain the difference. That is, it does have something to do with fault, and it is paid. So if somebody is negligent, the best example is you're driving along, you're stopped at a red light, the driver behind you is either going too fast or they're distracted and they rear end you, okay? They're negligent. And so they had a duty to stop, they didn't stop, they hit your vehicle and they caused injury. So they are at fault for the accident. That would be your third party claim. People think of it as your claim for pain and suffering and emotional distress. It's a little more than that, but that's typically what people think of. So when we're comparing these two claims, it's like comparing apples and oranges. They fall under this umbrella of motor vehicle accident, but they provide two separate and distinct benefits. And I'm going to go through those. And so hopefully by the end of this, you'll have a better understanding of what both provide. But this first party claim, we call it a first party claim because it typically is a claim between you as the first party and your insurance company, the second party. Okay. So we call it a first party claim because it's usually between you and your auto insurance. That's just the general rule. There are exceptions to that general rule, but just generally speaking, that first party claim is going to be against your insurance company. And that is going to provide you with certain benefits, regardless of whether you caused the accident or not, which we call allowable expenses, wage loss, and replacement services. So in terms of these benefits, when I say without regard to fault, what that means is you could be the person that was going too fast or distracted that caused the accident. And if you're injured, you're going to also get these benefits. Okay. And typically that's going to come from your own insurance company. Now we have the third party claim, and you may be asking, well, why do we call it a third party claim? It's called a third party claim because typically the duty doesn't arise out of a contract. It typically, the duty comes from the common law or it comes from a statute. And when you're dealing with automobile cases, it's typically our motor vehicle code, which tells us go the speed limit, stop at a red light, use your blinker, all of those things that we're supposed to do when we're driving and that we learned about in driver's education. So it's a third party claim because you're not the first party, you're not the second party, but you're the third party. You're not a party to that contract. And the third party claim is typically that claim for what we call non-economic loss. Your pain, your suffering, your emotional distress, and also your excess economic loss. So think of it like this. If I have an orange in one hand, which is my first party claim, and my apple in my other hand, that's my third party claim. Typically, they're not going to cover the same stuff. In this hand, I've got allowable expenses, wage loss, replacement services. And in this hand, I have my pain and suffering and my excess economic loss, which is anything over and above what that first party claim is paying for. Okay. So other potential claims that you may have if you're involved in an auto accident is going to be collision and or comprehensive. Actually, comprehensive is different. They get lumped together, but collision covers the damage to your vehicle if you're involved in an automobile accident. Comprehensive is if your vehicle is stolen, or let's say a branch falls, a tree branch falls on it. You're driving along, you hit a deer. That's going to fall under your comprehensive coverage. Collision and comprehensive are optional coverage. And so if you are involved in an accident and you don't have collision coverage, then the damage to your vehicle is going to be limited to the mini tort. So the mini tort is a claim that you can make against the at-fault driver up to $3,000 for any damage not covered by insurance. So this might be your deductible. So you have collision coverage, but you have $1,000 deductible. That mini tort would cover that deductible. Or let's say you don't have collision coverage on your vehicle. It's an older vehicle, it's paid off, you didn't want to put collision coverage on it. You can make this claim for a mini tort, but you're going to be limited to $3,000. So if your vehicle was worth $5,000, you're gonna lose out because your damages are going to be limited to $3,000. Other optional coverage is uninsured, underinsured, and you're going to hear me talk about this several times through the night. I'm going to encourage you all that when we get done tonight, pull out your deck page, and I'll explain what that is, but pull out your deck page of your insurance policy and make sure that you have uninsured, underinsured motorist coverage. It is a very important coverage, and hopefully by the end of this, you'll understand why. And it's relatively cheap. So remember, this insurance policy is supposed to insure you in the event of a loss. And so you are the person in the best position to evaluate your circumstances and know, if I was injured and couldn't work, or my vehicle was totaled, or if I have medical expenses, you're the best person to evaluate that and know what kind of coverage you require to protect yourself. Okay. So the last potential claim that we'll talk about is property damage. So property damage would be like if let's say you lost control of your vehicle and you hit a telephone pole and the pole fell down, your property damage would pay for repair of that pole. Or let's say you drove your vehicle into a building or a sign, it would pay for that property damage. All right, so you have this first party claim, third party claim. All right, and so what happened was when the legislature enacted the No Fault Act, remember, there was motivation behind that. They wanted to give us certain benefits, whether we were at fault or not. And then we wanted to get rid of these small little third-party claims. And so what they did is a trade-off. They gave us these insured benefits, our first-party benefits, which are going to be our allowable expenses, our wage loss, our replacement services. But in exchange for that, Michigan citizens gave up their right to sue the negligent driver unless their injury rose to a certain threshold. And so what that threshold is called is a serious impairment of body function, a permanent serious disfigurement, or death. And so think of it as, you've got to get to a certain level of injury before you can sue. So I'll give you an example. I had a family member come to me a couple weeks ago who had been involved in an accident. Somebody had pulled out and hit their vehicle and totaled their vehicle. They were not injured, thank goodness. But it totaled their vehicle. Their insurance company paid off the vehicle, but it was sort of old. And so they didn't get as much for the vehicle as they had hoped. So they came to me and they said, you know, I'm really aggravated that this person totaled my vehicle and it's caused me a bunch of inconvenience and I'd like to sue them. And I said, you can't, because first of all, you're not injured and you wouldn't meet this no fault threshold. So what we did was we got certain benefits in exchange for giving up other benefits. And why is this important? It's important because in 2019, the legislature passed a reform or changes to the No Fault Act, huge sweeping changes to the No Fault Act. The biggest change being that now we can elect our level of coverage for allowable expenses. You may have gotten that form in the mail, or you may have gotten a call from your agent saying, now you have to decide your PIP coverage. And we're going to talk about all that. So if you're lost about that right now, don't worry, we're going to talk about it. But why is that significant? It's significant because before the change in 2019, as Michigan citizens, we had uncapped lifetime allowable expenses. And that was huge. It made us unique. We were one of the few states out of the entire country that had that. And so, and it's one of the things that was given to us in exchange for us giving up this right to sue and tort. So when they made this change, they essentially said, you can elect unlimited, uncapped benefits, but you're going to pay more for that than if you elect a lesser coverage. But guess what? When they took away that lifetime uncapped, they didn't give back our right to sue and tort. And so it's a little frustrating from my perspective, knowing as much as I do about the No Fault Act, because it really is unfair to Michigan citizens. And they sold it to us as you're going to get reduced premiums. And so I don't know about the rest of you, but I haven't seen a huge change in my premiums since this law changed. And so as we start to go along tonight, I think you'll have a clearer picture in terms of where my frustration comes in terms of these allowable expenses. All right, so there are two types of coverage. So I'm going to sort of shift gears. I've given you the foundation of first party, third party claim. And so now I'm going to talk about, what are you buying? So when you go and buy your auto policy, what are you buying? Well, there's certain mandatory coverage. You have to have this coverage. And then there's optional coverage. So mandatory coverage is typically known as PLPD and PIP. Okay, so what do those stand for? So PLPD is personal liability property damage. So personal liability, if you look at your insurance declarations, it probably says bodily injury limits. That is in the event you cause the accident, injure somebody, and they sue you. Okay, so those limits are what are protecting you. And again, you're the best person to know what kind of coverage you need. You know, if you have a lot of assets and you are a person that is collectible, then you're going to want higher limits. And if you're a person that if you say, oh, I'm not really collectible, or maybe you just can't afford it, that's okay too. But the whole idea of this is to just know what you're buying. So then you can make an informed decision in terms of your insurance needs. Property damage goes back to that scenario I said before. If you hit a telephone pole or hit a building or it's damage to property, that's going to cover you for the damage you caused to that property. I'm going to cover PIP in just a second, but before I do that, I threw in this owner's civil liability because I wanted to remind myself to bring it up. So in Michigan, we have the Owner Civil Liability Act. And what that means is that the owner of a vehicle is liable for the negligence of a driver if the driver was driving the vehicle with their knowledge and consent. Okay. So this scenario, would be my husband takes my vehicle up to the store. He gets in an accident. He and I are both going to be potentially liable for that. So why is that important? It's important because now, excuse me, our joint assets are potentially reachable. And so our house, our joint bank account. And so why would that make a difference? It makes a difference in terms of assessing how much liability coverage we have. So the creditor of one spouse cannot reach joint property or the property of the other spouse. But if we're jointly liable for this accident, then all of a sudden that potential creditor or the injured person can reach our joint property. And so this comes up a lot. I find that especially with spouses or maybe even in a parent-child situation. So if you co-sign for a vehicle, you may unknowingly have become a co-owner of that vehicle and opened yourself up to owner civil liability. So I had a situation where a grandfather had co-signed for a grandson, and the grandson got into an accident, was uninsured, and he was not collectible, but the grandfather was. And so the grandfather had come to me hoping that I could defend the action and limit his liability. So it's, again, just one of those things to know so that when you're shopping for insurance, you can be informed. Now, I will tell you, my husband is self-employed. And so whenever he goes to buy a vehicle, they always want me to co-sign. And so when I did that, when I co-signed, I said, we need an umbrella policy. And so I went to my agent and said, I want to up our bodily injury limits and I want $1 million umbrella policy. I will tell you, when I purchased that umbrella policy, it qualified me for a multi-policy discount. And I actually saved $15 a month on my insurance by adding $1 million worth of coverage. But as I'm going to talk about later in the night, my agent never told me that. They never said, hey, Sarah, how about purchasing an umbrella policy? I had to ask for it. And so I find most consumers don't ask because they don't know. And so this is to give you the knowledge so that you can go and ask. So PIP stands for personal injury protection, and that is your first party claim. PIP is those allowable expenses, your wage loss, and your replacement services. Okay. So your optional coverage. So this is coverage you don't have to have, but I recommend that you at least have some of this. It'll cost you a little extra, but surprisingly, uninsured underinsurance doesn't cost that much. And so what uninsurance underinsurance is if you are driving along and you are hit by an uninsured vehicle and you are injured, your insurance will cover you if you have uninsurance. Underinsurance is if you are hit by a vehicle that is insured, but they're underinsured. So until 2019, when the No Fault Act was changed, our minimum required PLPD was 2040. So 20,000, 40,000. So there were a lot of people driving around with $20,000 worth of insurance who caused catastrophic injuries. And so in that situation, they were underinsured. So if you had underinsurance, your policy would kick in and cover you. And so this is a way to protect you and your family for a relatively small amount of money. So when we get done tonight, I encourage you to pull out your deck page, see if you've got uninsurance, underinsurance. If you don't, I recommend that you call your agent tomorrow and get it. If you do, I recommend that you call your agent, see if you can increase it, because you'll be surprised. You can go from $100,000 worth of coverage to $500,000 worth of coverage for a couple dollars. And so the more you have, the better off, because again, you're insuring yourself against a loss. So collision coverage, we talked about that it covers your vehicle in the event that it's involved in a collision. Comprehensive covers your vehicle if it's stolen, if it gets hit by it, you hit a deer, you know, a rock flies up, or you know, something falls on it, that's going to fall on your comprehensive. Rental roadside assistant, that's other optional coverage. It's not automatic, you have to ask for it. All right, so now I'm going to shift gears and focus on PIP. So the heart of the No Fault Act is these personal injury protection benefits, or PIP. And so why is it the heart of it? It's really the reason why they created the system. They wanted to give Michigan citizens the right to certain benefits if they were involved in a motor vehicle accident, without regard to who caused the accident, okay? And so what is PIP? PIP is allowable expenses, which I'm going to cover in just a second, wage loss, replacement services, which I'll also cover, survivor loss benefits, those are payable in the event of death, and then funeral expenses. So those are your basic PIP benefits. And now we're going to break them down. So as I said earlier, before the changes in 2019, allowable expenses were uncapped and lifetime, okay? And so after that change in the law in 2019, we now can elect our level of coverage. That lifetime uncapped, which was automatic before, is now an option. It's optional. You can also elect managed care, which means that you are agreeing to treat within a specified network. Other changes that took place or are taking place is there's now a statutory fee schedule, which now sets what your providers can charge for certain things. And it also put limits on family provided attendant care. Okay. So what are the levels of allowable expense coverage? And now that I'm doing this, I'm sort of thinking there's a slide that I'm going to get to that I probably should have moved up so you know what allowable expenses are. But to sort of give you a preview, allowable expenses is an umbrella of benefits. So think of, you've got this big umbrella over the top of you, and under that umbrella, you have medical expenses, prescription costs, physical therapy, rehab expenses. You need modifications to your home. Maybe you need grab bars in the shower now, or you need a wheelchair ramp on the front of your house. Maybe you can't drive, so you need medical transportation to and from doctor's appointments. Those allowable expenses are this huge umbrella of benefits that now we can elect levels of coverage. And so what are the levels of coverage? You can elect $50,000 if you have Medicaid and your spouse and resident relative have their own qualified health plan. You can elect $250,000, which is the default, meaning if for some reason you didn't elect, it's going to default to $250,000. $500,000 or unlimited. Okay. And then the last is if you have Medicare or a qualified health plan, you can completely opt out of allowable expense coverage. So why the reason I will tell you that is really say you're involved in you break, you have to do surgery, you have to do a certain amount of physical therapy, that 50,000 is gone really fast. Same thing with that 250. That 250, I know it seems like a ton of money, but it's just not. I handle a lot of no fault claims, and I will tell you that a good percentage of them exceed that $250 cap. Now, you may have heard that one of the changes that the law made in 2019 was that it now allows us to seek excess medical expenses as part of our third party. And that might seem, well, what's the big deal? Sarah, I can elect 250, my insurance will pay up to 250. And then if I exceed the 250, then I'll just get that from the negligent driver's insurance policy. But the problem with that is that they're also going to have a limit. And so they did increase the limit, the minimum limit to 250, 500, but they can opt out of that and elect 500 or 50,100. So let's say you've got 250 in insurance and they opted for 50,000 in bodily injury. Your maximum recovery for everything, pain, suffering, emotional distress, excess wage loss, excess medical, is going to be it's going to be their 50,000, and then your medical is going to be covered under that $250,000 cap, and it's not going to go very far. So what am I recommending? I recommend unlimited, and as I'm going to talk about later, I recommend unlimited, uncoordinated. At the very least, I recommend that you price it out, because you may find that the difference between 250 and unlimited is very small in terms of what it actually costs you. So this opt-out, I do not recommend this if you have Medicare. The reason for that is because Medicare is supposed to be a secondary payer. And so what I am finding is that Medicare is denying bills related to automobile accidents, which is leaving my clients with unpaid medical bills. And again, you might be saying, well, you can now seek that from the negligent driver. And that's true. But if they have a $50,000 policy, you're going to be really sad, because guess what? You're not going to have insurance for your loss, because that 50,000 is going to get eaten up really fast. The other issue with that is, let's say Medicare decides to pay. Medicare will have a super lien. And what does that mean? Well, they have a right to be reimbursed. So if Medicare pays your medical bills related to the accident, they get to go after your third-party claim. So if, let's say they paid out $100,000 in medical bills, they get that out of your third-party recovery. And so that's one of the reasons I am recommending the unlimited, uncoordinated. It's what I have, and I'm not selling insurance. This is just, I just do this for a living, and I see, unfortunately, I see it when the person is injured and they're sitting in my office saying, why didn't somebody tell me that I should have unlimited, uncoordinated? And a lot of times they elected uncoordinated, not even knowing what it means. So, okay, so that's our levels of coverage. So this allowable expense election, there's a couple things with it. If you elect anything other than unlimited, you're supposed to be offered an attendant care rider. You know, I've gotten a bunch of stuff from my insurance company. I don't remember seeing an attendant care rider, but I did elect unlimited, so that may be why. The burden is on the insurer to determine that their health plan is a qualified health plan. If you opt out, and check the box that you have a qualified health plan and it turns out it is not a qualified health plan, that is on you. And so what does that mean? It means that you could be left with a penalty, or you could be left with no coverage. So the insurer also has the burden of notifying the insurance company if their qualified health plan changes. So let's say you change jobs and you change health insurance plans. You have the burden of determining whether that new policy is a qualified health plan and notifying your insurance company. And if you don't, there's potential penalties involved with that. Whoops. I don't know how I just did that. And then last, if you do have to acknowledge your election, and if you don't elect, so let's say something happened, you didn't get the form back in time, or you've just been busy and you haven't really thought about it, then it goes to that default, which is $250. All right. So allowable expenses under the No Fault Act, I said earlier, it's this umbrella of benefits. So allowable expenses, which is that benefit that we're electing level of coverage, is this really broad benefit. The language of the No Fault Act is reasonably necessary products, services, and accommodation for an injured person's care, recovery, or rehabilitation. So that's really broad, and it covers a host of benefits. So here's that umbrella. That's what I said. I should have moved that slide up. So again, think of it as sort of this all-encompassing umbrella. And again, it covers medical bills, transportation. It might even cover food and housing if you have to be institutionalized. So like, let's say you had to go to a nursing home, modifications and accommodations to the home, prescription expenses, rehabilitation, attendant care. So I talked earlier about how they've now restricted family provided attendant care. So attendant care is care of your person. So let's say you're injured and you now need help getting in and out of the shower or the bath. You need help going to the bathroom. You need help getting dressed. And so that is what attendant care is. And so this change to the law now limits family provided attendant care to 56 hours a week. Now, you might be saying, why is that a big deal? The reason why it's a big deal, they didn't restrict entity provided. So like if I hire a company to send over a home health aide, they didn't restrict that, but they restricted family provided. And so it really is about your level of comfort in terms of whether or not you want to obtain that attendant care rider to give you that unlimited attendant care. So attendant care, think of it this way, and I've had this with clients. So I have a client right now who has 2 broken wrists. So she has casts on both arms. So she can't wash her own hair. She's finding it difficult when she goes to the bathroom to even wipe herself. She can't, I mean, so all of these personal needs, she's now having to have somebody come in and do those for her. So it just depends on your comfort level. Would you want that provided by a family member or someone else? And so that's why it's a big deal that they changed the law in terms of restricting family provided attendant care. But attendant care is paid by the hour, and it falls within that umbrella. And so attendant care is one of those benefits that can use up that, if you elect 50 or 250 or even 500, it can use it up really, really fast. And that's the attendant care benefit is one of those things if you're seriously injured, it can really be valuable to the injured person and the family. All right. So, coordinated benefits. I talked about this earlier, and coordinated benefits, this is something that you can elect on your policy to coordinate your policy. And you can do this as to allowable expenses. You can also do this as to wage loss. Okay, so what is coordinated benefits? So there's two types. There is a mandatory coordination, which you don't elect this, it's automatic. You don't get a reduced premium for it, but mandatory coordinated is when you are paid a government benefit as a result of the same accident, and it's the same type of benefit. So what's an example of that? You're involved in an accident, you're disabled from the accident, you now qualify for Social Security disability benefits. They get to set off or coordinate your Social Security disability with your wage loss. Okay, so if your wage loss is 500 and your SSD is 300, they get to set that off. So you get 300 from SSD and 200 from your no fault insurer, okay, to give you your 500. Okay, so the next step is permissive, and this is what you can elect, and it does give you a reduced premium. And so what you are doing is you are coordinating your no fault with your other insurance, such as health insurance or disability policies. Okay, and that might seem like a good thing. You're getting a reduced premium, right? But there's a host of problems with coordinated benefits. And so this is one of those things that there's no judgment. If you decide to coordinate your policy, that's fine, as long as you understand what it means to coordinate. The problem that I have is typically the way this works is the agent says, do you have health insurance? The person says yes. The agent checks the box and coordinates the policies. And then you get your declaration and you're looking at it and it says medical excess, wage loss excess. And you don't realize what that means until after you've had an accident. Okay. So what is the problems with coordinating? So some of the potential problems with coordinating is that ERISA plans, which a lot of, I won't say all, but a lot of employer provided health plans are ERISA plans. And ERISA plans create some issues in terms of liens against your third party. And it also creates some issue in terms of the coordination, which could result in a deductible to you. And it's fine, but most people don't know whether or not they have a self-funded ERISA plan. And so if you opt out and say you have a qualified health plan and it turns out that you have a self-funded ERISA, it may just create an issue for you. Medicare, Medicaid, and Medigap, as I said earlier, they're secondary payers. They are not supposed to coordinate with auto. Union medical plans, they typically also have a right of reimbursement. So I recently had a client who had a coordinated policy. The union medical plan paid his health benefits, but when we went to settle his third party claim, they put their hand out and said, we want to be reimbursed. And depending on the type of plan and whether or not it falls under federal law, they might have a right of reimbursement, which is where ERISA comes in. Military plans the same way. And so it creates issues in terms of that third party recovery. You may be sharing a portion of your recovery with your health insurance, Medicare, Medicaid, union plan, military plan. So depending on the type of plan you have, that third party, think of it as like a pie, and you're slicing up that pie, and now you're sharing your pie with your health insurance because you coordinated. Another issue with it is that the insured, I've got insurer on here, but it should say insurer, is not made whole. And so what happens, this happens a lot with wage loss. So you coordinate your wage loss with your disability policies. You've been paying on these disability policies, and now you've coordinated it with auto. You get this slight reduced premium. But they now get the benefit of your disability policy instead of you. So let's say your wage loss is 500, disability pays 300, they get the benefit of it, not you. So now they get to set off that 300, you get 3 from disability, 2 from no fault to give you your 500. If you would have had an uncoordinated policy, you would have gotten the full 500 from your no fault carrier and the 300 from the disability. So you would have gotten 800. And so depending on what your level of wages are, wage loss, which I'll talk about in a few minutes, is capped. So right now, I think it's around $5,700 a month. And so if you earn more than $5,700 a month, that disability policy is going to be important. But if you coordinated them, then you're going to be capped at $5,700 a month, and your disability is going to be subtracted out of that. So you're not going to get both. So you may not be made whole. The other issue with coordinating coverage is if you have an HMO, so you have to treat in network with regard to your health insurance, you're still required to do that. And if you fail to do that, then no fault isn't going to be responsible. So what do I mean by that? Let's say that your health plan requires that you get a referral. You didn't get a referral, and so your health insurance goes, nope, we're not paying it. Auto isn't going to have to pay it either because your policy is coordinated. If you have an uncoordinated auto, then you can pretty much go wherever you want. If you want to see a specialist, you don't have to get referrals. And so your treatment is not restricted. The other issue that I see with coordinating coverage is that it actually can delay payment of benefits. And a lot of times my clients end up with what we call balance billing. So let's say you have a Blue Cross Blue Shield policy, you have a doctor's bill of $100, Blue Cross Blue Shield pays $50, there's a $50 balance, auto goes, no, we're not responsible, it's a balance bill. What was reasonable is what Blue Cross paid. And so we end up in this fight over it. And a lot of times those get reported to collection agencies, and it can be incredibly frustrating for the client because they're like, I have insurance. I don't understand why this isn't getting paid. So just understand that when you're coordinating, it's very important to understand what your health insurance policies are, and that they potentially can get reimbursed from your third party, depending on the type of policy. And if you have restrictions under your health insurance, you have to treat within those restrictions. All right, wage loss benefits. They pay up to 85% of gross wages, up to that monthly cap, paid for 3 years. If you're a self-employed person, I see this with a lot of clients. Self-employed people love to deduct things. That's not an issue as long as it's legal, it's fine. But what happens is your wage loss is going to be based typically on your tax returns. And so if you deducted everything, it's going to show that you actually don't have a wage loss. And so what happens is the self-employed person feels the loss because now they don't have the income to pay for their truck, pay for their auto insurance, pay for their cell phone. But all of those things, because they were deducted, left it showing as if there wasn't any wage to them. And so self-employed people can be unhappy with that. How do you avoid that? Pay yourself a salary. You can W-2 yourself or just pay yourself a reasonable wage so you can actually show what you're being paid. The problem with that is, you know, you've got to balance the tax benefits and all of that. So that's something to talk to your accountant with, but just be aware of it. So typically, oh, I keep trying to move my little screen so I can see. So your wage loss is typically what you were earning before the accident. And then if you're able to return to work, but only part-time, the difference between the two, up to 85% and up to that cap. Wage loss stops at the time of death. If the death is a result of the accident, then it will convert to survivor loss benefits. The disability that results in the wage loss must be as a result of the accident. I had a client who went to jail because of the accident. He was drunk driving. And so in that situation, he didn't get wage loss because even though he was injured, he wouldn't have been able to work anyway because he was in jail. Lost earning capacity is not recoverable. It has to be wage loss you would have earned. And so you can't come in and say, well, I would have gotten a promotion next year and I would have been making more. That's considered lost earning capacity. It has to be what you were earning at the time of the accident. Replacement services is the third type of benefit. So replacement services are household services. These are things that you did around the house before for either yourself or for your dependents that you can't do now. Laundry, grocery shopping, mowing the lawn, shoveling snow. They pay up to $20 per day. It has to be something you would have performed. So if you paid somebody to cut your grass before, you can't now get them to pay for the grass because you didn't perform it before the accident. Household services or replacement services are different from attendant care. Attendant care is care of the person, and that's paid under that umbrella of allowable expenses. Replacement services is more your household chores. And so they pay $20 per day, and this can be provided by a family member or a friend or somebody, but it does have to be incurred. All right, so we're sort of coming up to the end of this, but before I do that, I want to talk about captive versus independent agents. So the biggest thing that I hear from clients is they've had an accident. We're now looking at their coverage. And when they find out that they didn't have either the right type of coverage or not enough coverage, they go, why didn't my agent tell me? And the answer is because they don't have to. And so there's two types of agents, a captive agent and an independent agent. Captive agent is an agent of the insurer, and they have no duty to the insured or the consumer. They're simply a seller of the insurer's product. So who is a captive agent? State Farm, AAA, trying to think who else has captive agents. So typically, if you go in to purchase a policy and they only sell one type of policy, they're a captive agent. And so they're an agent of the insurer, not of you. An independent agent typically will have multiple products, so they sell multiple insurance policies. They are considered your agent, and they do have a duty to act in your best interest, but they have no affirmative duty to advise. So it's actually the duty of the insured to read your policy, know the options, and to ask questions. And so their duty would arise. So if you were asking about your options and you're asking questions and they misinform you, there may be a duty. But if you go in and say, I need an auto policy, and you fill out the application with them and they say, do you have health insurance? And they check the box, coordinated, and you sign off on that, you can't come back later and say, why didn't you explain to me what coordinated benefits were? Because they have no duty to do that. So the burden is on you to read your policy, know your options, and know what you're buying. Okay, so I put this here in big bold, read your policy. And so I find with people, a lot of times they get their policy in the mail, it goes in the garbage. I will say to clients, I need to see your deck page. And they'll go, what's the deck page? So your deck page is typically that it's usually the first couple pages of the policy. It'll usually list you as the named insured. It'll list rated drivers, it'll list the vehicles, and then it'll provide a place that shows you what your coverages are. It'll say bodily injury limits, and it'll provide a number. It'll then say PIP, and it'll usually say medical wage loss, and it'll either say primary or excess. If it's primary, you have an uncoordinated policy. If it says excess, you have a coordinated policy. Sometimes it'll just say coordinated, but sometimes they use the other terminology. Uninsured, underinsured. I can't say it enough. If you don't have it, get it. If you have it, get more of it. It really is important. I have a client significantly injured. The man's policy was rescinded, so he's considered uninsured. We're now fighting over that. But my client has uninsurance. So if it turns out he's uninsured, they're going to be covered under their own policy. So read your policy. So uninsured, underinsured motorist coverage. I just said this and I'll say it again. So this again is, you didn't cause the accident, somebody else did, but your insurance policy is providing coverage in the event they're uninsured or they don't have enough insurance. Umbrella policies. I said this earlier about my personal umbrella policy. Umbrella policies can provide extra coverage for bodily injury. They can also provide extra coverage for uninsured, underinsured, and they don't cost a whole lot. So depending on your situation, you may want to consider an umbrella policy. And then that's the end. And so if you have any questions, I'm happy to answer them for you. Anyone? Questions? Did I put you all to sleep?
I don't see anything in the chat right now. You guys are welcome to unmute yourselves and ask out loud or whatever you like. I know it's a lot of information.
I know, it's huge. So I teach auto law at Oakland University.
Okay.
And it's a 7-week course. And so what I just covered in this past hour,
Yeah.
I cover for my students over 7 weeks. So I gave you like the tip of the iceberg general information, but hopefully it's enough information that you can look at your own insurance policy and then make some informed decisions in terms of buying your auto insurance.
Yeah,
So.
Absolutely. Lena says, thanks for the information. Yeah, so glad you could join
I see
us.
that. So if nobody has any questions, thank you for taking an hour out of your evening to listen to me. And if you ever have any questions, the library has my contact information. Please feel free to reach out to me. This is all I do is auto insurance. So it's and I don't sell auto insurance. I just see what happens after the accident happens. So
very good.
All right.
Well, thank you so much, Sarah.